folks, this is Armond with the Right Flow Show. Today we got a special guest with Buy House Easy. The gentleman's name is Zeke Slomy. He's going to walk you through this excellent program with Buy House Easy. And I've sent several of my clients through Buy House Easy. It's a very cool program where they qualify you not based off of your credit, but based off your income. So it's an excellent program, like a Plan B program. And it just allow people to buy houses, even though your credit might not be where you want it to be, but it's still where you can experience the American dream of home ownership. So I'm gonna hand it over to Zeke. Zeke.
Yes, thank you, Armand, for inviting me to the show. Happy to be here, and happy to come in front of all your listeners, and just talk a little bit about this program. So you can hear my accent. I'm from Israel, so that's where the accent coming from. I'm based in Alpharetta, Georgia, and we'll get to it. Buy House Easy is licensed in many states and slowly and very responsibly growing. Let's go through a few slides here, and we can explain, and you can learn about how this program works. And if you've got any questions, just interrupt me in the middle, and hopefully I can touch all the things. And we also have you will see all the contact information at the end. We've got the website, of course, and Facebook group, and a lot of frequently asked questions that I'm sure many people have. But let's dive into it. And Armand, if you have any question, you can just let me know in the middle.
Yes, sir.
Yes. So who are we? Okay. So you see there are two logos here: Buy House Easy and Own Easy. So we are alternative financing private lender, and like Armand said, this is your Plan B. Meaning your real estate agents, real estate practitioners, real estate professionals. We're working with you as the real estate agent to reach out to the home buyers. So we always tell when we talk to home buyers, or when you as a real estate practitioner talks with the home buyer, it's important to know that if they can qualify for conventional or traditional bank, that's would be your best chance. It's a lower interest rate, it's a lower down payment. It's preferred, but for whatever reason, and there are many reasons, and like Armand, you mentioned, credit is one of the big issues. Right. People cannot get qualified for conventional, then we are your Plan B, we might be able to help. So, and we'll explain it. A disclaimer, so Buy House Easy is a trade name. We are doing business, Own Easy is the company, the parent company, and doing business as Buy House Easy. What we do. So we help renters become homeowners. That's really very, very simple, straightforward. Why we do it? So we want to help as many renters as possible achieve the American dream of home ownership. It's a great business. Like Armand, you said, you send us many customers, and thank you for that. Now, it's important to note, Buy House Easy is not a government program. So I know sometimes we get a lot of questions if there are some down payment assistance. Down payment assistance programs exist in certain states, and we are able to accommodate and accept funds from those programs. But at the end of the day, we are a private lender or private business working with investors, and we have to make sure that as we are in the middle, we take care of the investor as well as the home buyer in the middle. So this is not a government program. How do we do it? So along this presentation, we're going to show you the high level, the low level, and the very low level, in case you want to dive very, very deep to figure out how we do it. Everything is clear, everything is transparent, both to the homeowner, that's the home buyer, and both to the real estate agent that is working with that home buyer. Everything is clear to everyone. So we provide a platform where the investors lend to qualified home buyers. This is really the high level. Investor buys the house with cash, and on the same day, he sells the house to the home buyer on a loan. This is kind of straightforward. Where we do it. So right now we are licensed in Indiana, Texas, Georgia, and New Mexico, coming soon Arizona, North Carolina, and slowly growing responsibly. You can send us some questions. I know people are asking about Florida, Alabama, Tennessee, and Ohio, and many other states. We do have a roadmap for the coming years to grow, and we'll get to your state if you're not in one of those states at this point. Okay, who is this program for? So our customer profile is somebody that he lives in the US, he works in the US, he pays taxes in the US, he rents and he wants to own a home. He does not qualify for a conventional traditional bank mortgage, and there are many reasons. That's what we call Plan A. He intends to live in the home that he will she buy. He has some savings, at least 10% for down payment. And the bottom line is very important. We're not looking for credit, so no credit or low credit. If you're a foreign national, you've got tax ID, ITIN, all of those things we can accommodate. And that's a very big, important distinction between us and other banks that provide mortgage. Sometimes they will ask you for a credit, and or they need some other form of securities. Maybe they will ask for 25% down payment or something like that. So we are able to accommodate many of the people that conventional, what we call Plan A, does not work. Continue. So the program is mainly for affordable housing, and the houses should be in a move-in ready situation. We also have exception. We work with the builders that are building new construction. So that's for the line, the move-in ready. But as far as the affordable housing, and you will understand it very quickly, the way our program is built, it doesn't work if the houses are too expensive. It just doesn't make sense. I mean, of course, every situation is unique and we have to evaluate it, but high level, majority of the people that we're able to help are people that are in the affordable housing bracket. Who is this program is not for? So it's not for investors, sorry. Meaning we're not helping investors with loans. Investors give us the money from the on the other side. It's not for a fixer-upper, it's not fix and flip, it's not for remodeling. We are not a hard money lender. And this program is not a rent-to-own, and it's not a lease with an option to purchase. This is a straight purchase, like a mortgage. You put the money down, you get your name is at the deed, you're recorded at the county. It's done with the closing. There is no, every money that you put goes exactly towards you building your equity. It's not a non-refundable option deposit or all kind of things that sometimes there are other programs that's how they do business. So that's important. So this presentation primarily is for real estate practitioners, and we want to make sure that we are growing. That's how we grow our business. We don't work directly with home buyers. I mean, home buyers do reach out to us and we talk to them, we help them with the application, we explain the program, but at the end of the day, the home buyer needs to work with a real estate agent that to help him find the home and make the offer. So that's why real estate agents are really our frontline ambassadors. Buyhouse EZ does not own homes. The process is that once a home buyer completes an application, he receives what we call a pre-screen letter. So that's a little bit different. Normally, when you do it with a conventional lender, you get a pre-qualification letter, or the agent asks you how much is he qualified for. In our situation, it's a pre-screen letter. That means that we have an investor that is ready to pay cash to purchase a home. And this is based on the application that that home buyer did. So we already know how much of a home that home buyer can buy. So then at that point, once the application is complete, our underwriter provided a pre-screen letter, then the agent and the home buyer are working together. This is just like in any other transaction, and to find the dream home for the home buyer. The agent is going to make the cash purchase offer, and then the nice thing about it, it's going to be, and you will see it in a little while, there are two commission checks. There is a standard commission check that you get as a real estate agent when you do the purchase. And also because we have a second transaction on the same day, we also give you a second commission, kind of a thank you for bringing that customer to us. And I will explain it a little bit ahead. So now if you see that presentation and you are a prospective home buyer, if you feel that after what you've heard, that program might work and this is for you, this is where you start. You've got actually 4 options to start. We have a mobile app, Android or iPhone. I mean, first of all, if you speak English or Spanish. So we support both languages. Our account managers are bilingual. And then you can either use a mobile phone app, iPhone or Android. You can download the app. You can go to our website. You can fill out an application online. You can use the good old traditional way of a paper copy, download, type, and scan and send it back to us. Or you can even call our account manager and provide all the information over the phone and just send the documents later. Again, no credit check. So it's important because sometimes people are afraid to fill up an application. It's important to know that we don't report, we don't look for it. It's only for our purposes in order to know if we can approve you, if we can work together, if we can send you a pre-screen letter that will let you know how much money you can start shopping for a house. So don't need to be concerned that you provide Social Security or we're not reporting credit check. Your credit score is not going to be impacted. It's not part of how we do the application. BuyHouse is a technology company, and we use data, and we've got our own algorithm, so we know how to create the application process and how to approve even without the credit. What we need is part of the qualification. So we'll be looking for employment, so W-2 from the past 2 years. Tax form, we want to see that you pay taxes, again, for the past 2 years. If you are self-employed, again, that's many people that we work with, they are self-employed. So the way for us to figure out is to see 1099s and Schedule C. And you need to provide it, and so we can evaluate how much will be your income. 2 recent pay stubs, some form of ID, it could be driving license, could be passport, could be your matricula if people have this, or ITIN. Looking for car statement if you've got any car payment, and a cell phone bill. Again, reminding credit is not part of the application. And by the way, Armond, if you have any questions so far, just let me know.
Well, yeah, I know one question that I know a lot of people probably would want to know. Say, for example, if they have a bankruptcy, what if they file bankruptcy?
Yes. So bankruptcy, there's Chapter 7 and Chapter 13. Mm-hmm. Now, if it's Chapter 7, we need to see, first of all, it should be 12 months after the court discharge date. So that's something that we cannot do sooner. I mean, I get many people call, they say we are 10 months from the court discharge date, so we have to wait 60 more days. I mean, we have to wait 2 more months, and things like that. I mean, if somebody had very recent, like you mentioned earlier, 6 months, 4 months, we have to wait until it's full year. That's one thing. The other thing, because it's a unique situation, our underwriter will be asking for some sort of a write-up to better understand what is the reason for the bankruptcy. And if they will determine it's an additional risk, then they have to find what we call compensating factors, meaning we can still approve you, we can still provide a pre-screen letter, we can still have an investor buying a house, but maybe we will ask for a bigger down payment or things like that. It's very important. It's a good question. We get asked it a lot. It's really important. And like I said, every case is unique. So don't be afraid if you had bankruptcy. I mean, we do need to wait the 12 months, but after that, we need to understand what was the reason, especially now that we're coming out of the pandemic. Many people lost jobs because of the pandemic. So if it's pandemic related or things like that, we are really trying to work very, very hard with the applicants, with the home buyers, to see that we can approve them and find out. And I'm sure from your work with Teresa, our underwriter, she really tries to help everybody that's applying. So really working together, trying to find compensating factor, maybe bring a co-borrower, do something to help the people out.
Yes.
So yes, good question. So now let's dive a little deeper into the low level of how we do it. What are the program terms? We've got what's called the risk factor fee. That's a 20% that we add on top of a cash purchase of the house. And I'll explain it a little bit later. The interest is a fixed interest rate is 9.25. Now, many people, when they see those two things, they says, wow. But the thing to remember is that we are Plan B, and we are the last resort between you and you're actually being able to be a homeowner. Meaning, if you qualify to Plan A, go get Plan A. It's like I said, it's a lower down payment, it's a lower interest rate. But if you cannot, then you're left with renting. And when you rent, you basically pay the mortgage for your landlord. So you don't build equity, it's nothing for yourself. So this is, the way for us to do it. This is the arrangement we've done with the investors, because the money is coming from investors that they also need to be paid. So that's how we structured our program. Now there are 3 options for down payment: 10% for 15 15 for 20, or even if you've got 20% saved, you can go even as far as 30 years. Obviously, what it means that your monthly payment will be lower. The interest rate will not change. The interest rate remains 9.25. Now, sometimes there are situations where people have more than 20% down, or they do have 20%, but they choose the, let's say, the 15 years loan because they can stand the monthly payment. In that situation, we can even do some additional, maybe reduce a little bit of the risk factor fee, because it means that there is less risk in the transaction. You brought more money from home. Now, another point I want to mention here, we touched earlier about many questions people ask if we use a down payment assistant, like a state-provided down payment assistant program. So money that comes from a down payment assistant program is something that we will be looking, and we will be accepting it during the closing, but it will not be in exchange of those numbers that you see here. So meaning, if you are able to get a certain amount of money, you cannot put it towards your 10% down for 15 years loan. It will be on top of that. And the reason we do it is because we want to make sure that you, as the home buyer, have some skin in the game yourself. When you bring money from home, money that you saved and you earned, you look at the transaction, you look at the home differently than something that the government provided to you. So again, we're not undermining, and we are accepting, but this is not the government program. Like I said, I mean, it's not a Section 8, it's not a new Section 8 or something like that. We are a private lender. We also have to make sure that the people that we work with will stay in the homes. Those are the homes, you know, they need to stay in those houses, and just instead of being renting, now they own the home. So they should be proud of that. So we are accepting those down payment assistance funds, but it will be on top of the down payment that is part of the program. Nice. Inspection, yeah. So inspection is needed. This just to show that the house needs to be livable, right? It's not a kind of a fixer-upper. It needs to be livable. And we look at the inspection, and we are working very close with the real estate agent and with the home buyer. We point out items that we've seen in the inspection, and we are requiring 90 days, within 90 days, to have those items repaired. So this makes sure that, you know, we are protecting the property. If we see some mold or some leak in the roof, or maybe the HVAC or something that is not working, needs to be fixed. So the house needs to be livable. Appraisal is not needed. So now there is a star here. In most cases, it's not needed. The reason is there are some situations where people want to buy the house that they're currently renting, and it's kind of hard to get the exact comps in order to figure it out. Sometimes you need the BPO or things like that. So that's why most cases, this is not the situation. Most cases, we just don't need the appraisal, because people just go and they shop around, and their realtor helps them find out the house, and they see the comps, and they figure out themselves how much is a fair market price for a house.
Just one thing, you mentioned the 90 days, just to clarify that, that's 90 days after they're in the home. They have 90 days in order to fix it up. I think that's amazing, because even though, you know, you find normal with the traditional way with the lenders, if they find some items that pretty much delay the closing from happening, but you guys will allow them to close on the home and give them 90 days in order to get those items addressed and get them fixed. That's awesome part of the program. Yes,
that's very good. Yeah, and you're right. And we look at, I mean, it helps us in two situations. First of all, we see that the inspection is, you know, decent, right? I mean, we know how the house looks like. And then also we are forcing them to fix up the little things that we see there in order to make sure the house is livable, and there is, you know, there is no more decline in the situation.
Yes.
Now, no prepayment penalties. That is very important, especially for people that have a credit situation. The reason I'm saying it is because many times the home buyers, they have a situation that credit is low, and that's actually the only reason that's preventing them from securing a bank mortgage. Now, sometimes it takes, you know, months, sometimes it takes years to fix your credit in order to be able to qualify for a traditional mortgage. If that's the case for you, then instead of, you know, spending 3, 4, 5 years renting until your credit is better, and you do work, you do have savings, you can start with that program. And then once you are able to qualify, you can refinance and pay the loan and there is no prepayment penalties with us. I mean, we're just happy to get the money back, and we put it back in circulation and helping another homeowners, home buyers.
Yes. Yeah, that's awesome. That's what I kind of explained to a lot of guys that, you know, they have some credit issues. Maybe they close and they're not quite there where they can get a traditional mortgage. They can utilize this program. And then once they get their situation turned around where they can qualify for a traditional mortgage, then they can, you know, obtain a loan, refinance, and then, you know, get a lower interest rate at that time. But they can still buy a home now, even though they have some challenging issues on their credit. It's just really amazing.
Yes, exactly. All right, so how fast we do it? How fast? Many times we ask that question. So application decision, that's where the home buyer starts. He fills up the application, he needs to sign the application, the borrower authorization, rent verification, we have to verify the rent, and then supply all the documents to support everything that he disclaimed. And then within 2 to 4 business days, from the point he completed, we can give him a decision, approve, decline, and if approved, a pre-screen letter, and he can start shopping around. So that's the first part of the application. This is fairly fast. The closing, because this is going to be a cash purchase, we can close as fast as 14 business days. And this helps the real estate agent that is actually competing with other potential offers. You come as a cash buyer. So we can close fast, and if it's, you know, most cases we're working with the title company, with the closing attorney, depending the state. If they know us, they know how the program works, they can furnish all the documents ahead of time, they do all the title check and the title abstraction and verify everything within those 14 days, and we can actually close very fast.
Nice.
Yep. Now, if you are many questions I get asked, the real estate agents, they really want to know the nitty gritty, so to speak. So this is a very low level of what we do. The transaction flow is double closing. You need to be familiar with the term double closing. If not, then we can explain. It's happening on the same day. There are actually 2 settlement statements. There's an A to B where OwnEasy, like I mentioned earlier, OwnEasy is the parent company, is the cash buyer. Now, cash buyer that comes with the original home buyer, and he has signed the contract. So the home buyer, when the real estate agent make the cash purchase offer to the seller, he adds and or assign. He makes the contract an assignable contract. Now, you know, investors many times, wholesalers, they talk about assigning a contract, assignment fees, etc. So we are assigning the contract, but there is no assignment fee. It's just to allow OwnEasy to come as the cash buyer and make the purchase on the A to B side. So the seller actually, he doesn't really care. You know, we just see a cash buyer come, somebody comes and buys the house from him. So that's the A to B. Now the B to C side happened on the same day, immediately following the A to B transaction, that OwnEasy now becomes the seller and the lender, and the home buyer now is the borrower. So this is the second transaction where the term that was explained earlier, 10% down, 15 years amortized loan, and all those things come into play. So this is the B2C side.
Right. Well, one thing I wanted to say with looking at this from a real estate agent, if they're not familiar with the assignment of contract forms, it seems complex, but it's a really smooth process. Basically, just a very high level from a real estate agent side, you're going to put the buyer's name, and then you put like and or assigns behind it. But the best way is just to call in, and they will walk you all the way through the process. It's really simple.
Yes, that's exactly right. I mean, sometimes we work with closing attorneys or title companies. They're not familiar with the process. Sometimes they even think, and you know, I see you laughing. Sometimes they think it's some sort of a scam.
Right.
You have to, you know, we have to educate them. It's funny. I mean, we don't have a degree in law, in real estate, but you have to educate to tell, hey, you know, it's legit, it's valid, it's, you know, this is happening. Right. And you can call some other colleagues of yours that working with investors, and you will know that, you know, this is it's a common way to do business.
Yes. And for example, example other than this, so say, for example, if I had a company, say company ABC, and I'm making an offer on a property and, ABC is going to buy the property, but I put and or signs, at the closing, because I'm not really sure whether I'm going to close in ABC or YZX company. So when it comes down to closing, I want to assign it over to YZX instead of closing in ABC. I mean, that happens all the time where you make an offer in one entity, but the other entity, that closes the transaction. So it's not too uncommon. It's just a lot of people that are just not aware of the different sophisticated ways of making offers on properties.
Yes, yes. Many times the reason is that real estate agents like to work with the state board or state commission, the local real estate commission. They have approved forms.
Mm-hmm.
So they work with those forms, and we accommodate. We don't have our own paperwork. I mean, that's
right.
Another thing that we try to make it as simple and as standard as possible to a regular transaction. Just instead of a bank, there is a only Z at the other side as the
yes.
lender. So that's why we tell them, look, use your standard state provided forms and just add and or assigns, which makes that standard form assignable.
Yes.
There is no assignment fee. I mean, it's just to allow us to come as the buyer. That's it.
Right.
The transaction players. So we've got the closing attorney, or if it's a title or escrow company, depends in the state. The real estate agent, which is the buyer agent that we work with and represent your customer, the customer. And many times the seller also is not on himself. There is a real estate agent on the seller side. There is only Z, which is a licensed lender in the states that we operate, and the deed is recorded at the county, just like a regular transaction. You're responsible for taxes, for insurance. That's about it as far as everything. Now, some resources, some knowledge and education. We have a alternative financing private Facebook group it's mainly for real estate agents because we exchange information there. So we call it Plan B Alternative Financing with Buyhouse EZ. We have a website, Facebook, Instagram. You're welcome to visit all those, ask questions. We have got the account managers that are actually monitoring those websites, and the Facebook and the group are able to answer you live, or you can just send a question and we will get back with you.
Awesome. Yeah, awesome presentation. Just one other thing is, say, for example, what's some of the reasons why people would get declined for the program? I haven't had one of those as of yet, but what would be some of the reasons for someone to get declined?
So many times we see that there is not enough employment history. People, will give us the W-2, but they work 1 year. Or people that pay taxes, but they say, I didn't file taxes 2 years ago. I did file only last year. So if our underwriter is not able to decide how much money that person will be able to make on a monthly basis, they would suggest either to bring a co-borrower, which we can get the information about employment and the rent verification, or they will just have to decline it until we have the sufficient details that we need. But most of the cases is like not enough employment or things like that, or taxes that they didn't file. That's why, the first question to ask earlier was, do you pay taxes? Do you work? I mean, those things, all of them have a meaning because, if people live here, they work here, they pay taxes, and, you assume that, if they work, they have W-2. If they pay taxes, you see the tax returns, 1040s, or if they're self-employed. So you see all those information when they fill up the application. Okay,
excellent. This lead generation, this is I'm not aware of this part here.
Yes, that's great. Actually, that's amazing. It's really as simple as it sounds. We know that many real estate agents that we work with, they generate their own leads. I mean, they reach out, they buy lists, or they get some other way from the brokerage. But what we also do is through our Facebook and social media department, we are actually doing sponsored Facebook ads. And the way we do it is we are creating an ad, a visual, that will have your information as the real estate agent with your logo, with your contact information, with your brokerage information. And also there's going to be a little kind of sticker with Buy House Easy information on it.
Okay.
And you decide how much money you want to spend, you decide which cities you want to target, and you decide the dates that you want to have the campaign run, and we just run it. And
Okay.
we split 50-50 with you. I mean, we do it. We are not in the business of lead generation. We're in the business of making loans, but we want to help you reach prospective home buyers. So we will split 50-50 up to a monthly cap of 150, which means we can spend together, we can spend $300 for Facebook marketing. And that goes a long way in Facebook money marketing. I don't know if you do marketing or some of your listeners, but $300, that's a nice amount to put towards the Facebook ads. And there is a link here that you just fill up the information. You have to upload a very good, high quality visual of you, maybe some caption, logo, contact information, and tell us the information, like I mentioned, the city that you want to target, or more than one city. Now, it's important to note that because it's considered a housing category on Facebook, we cannot provide zip code. We have to provide to be city specific. Now, we cannot dive too deep as far as the demographics, but I can tell you that we had some agents. They know, and we know, and I'm sure you also know, a lot of the people that are customers are coming from Latino and Hispanic background.
Yes.
And so that agent, she doesn't speak English, she doesn't speak Spanish, but she said, let's do an ad in Spanish. And she partnered with another Spanish-speaking real estate agent in her office. And the leads that came in, because the people click on the Spanish-speaking ad, they just work the leads together. So the Spanish-speaking was able to work with those prospective home buyers to qualify them. Again, remember, qualify meaning those people click on the ad. So first question to ask, hey, did you try to go with a bank mortgage, with a regular mortgage? If they didn't try, so they should, because maybe the bank can help them. But if they know that they cannot, then we might be able to help them. So we were able to accept some of those applications, start working with them. And then the real estate agent that was speaking English, she was doing all the paperwork side of it, the contract, the transaction. And the other agent that was doing the talking and showing and all those things that required interaction with the home buyers. So, and they split the commission eventually.
Nice, nice.
Yeah, so you should also take advantage, just click the link. It's very simple. We will do back and forth. Our social media department will create the ad. You will approve it. And we just run it.
I'm gonna get with Teresa on that. I think that is just pretty good. We did do it for a few months at the very beginning, but I'm gonna follow up with her. I think that'd be pretty good. I'm gonna reach out to her.
That's nice. It's nice. I mean, I can tell you that we've done, and we've got multiple campaigns running in Georgia, and we get hundreds of leads, of leads, and we work them together. I mean, we are in touch with the real estate agent. He knows that he is reaching out as a real estate agent, and we are reaching out as a lender. So together we are working, and when you've got two motivated parties, it's better than one. So
yes.
It's good. It's a good way, and you test it out. You don't have to spend too much money just to test out, to see maybe you want to start a new city or see something, certain area that you feel that maybe you can grow into and you want to test it.
Yes.
Everything is ready for you. Now, when you click on that link, by the way, on the top, you will see there is an example of how the ad looks like. So, you can see some examples, some, headshots, some full body, English, Spanish. You can figure out and maybe you want altogether something new.
Awesome.
That's one thing. The other thing is a live training Thursday, every third Thursday of the month. And if you're lucky, you are lucky. Today, what is it? Today is the 14th. Tomorrow is the third Thursday of April. So tomorrow at noon, we've got a webinar.
Awesome.
But it will be the same presentation, so you don't need to join.
Awesome. Yeah, I'd like to thank you for your time. I think this would be very, very helpful for a lot of folks that just kind of, it's a lot of people that's just not aware of the possibility that they can buy houses even though they have bruised or damaged credit. And, working with you guys, this will help out a whole lot of people. And if anyone, wants to get involved, there's the contact information. You can contact them. through the phone number, or you can look them up and contact them online. There's an email address as well. And any real estate agents, reach out, because it's definitely a good alternative plan. If the person's financing fall through, they can use this where you can still move forward with a transaction. You can get paid your commission. Actually, going forward with this program, you're gonna get paid 2 commissions. So it's a very, very good program. Anything you'd like to close out with, Zeke?
No, great. I think it's great. I'm happy to join, happy to help you and your listeners to reach out and educate people. And
yes.
It's thank you for inviting me.
Thank you for taking the interview.
Yes, absolutely.
All right. Well, this is the Right Flow Show. Until next time, thank you.